Hey there, everybody. Thomas with Basecamp Trading. It is Thursday, July 6th, and we're going to take a look at Tesla and this massive down move we've had over the past couple of weeks. And I kind of want to point out what's happened, how you could have been able to know that this was getting ready to drop based on price action and momentum. And then we're going to talk a little bit more about, okay, well, now that it is selling off, what do we expect to happen next? What's going on next? So first thing first. We're going to start on a lower time frame. We're going to start on 240. We're going to go to a daily. Then we're going to go to a weekly. Then we're going to go to a monthly, because that's how you get a big picture, a long-term picture. You start with smaller time frames, and we look forward to get bigger from there. So first thing you wanted to look at here with Tesla, and this is why momentum is so important. And if you come into the trading room, you'll see me. I talk about naked trading and price action trading all the time. That's the number one most important thing. But number two is momentum. Pay attention to the strength of a market. And you can see here, as we were continuing to climb, the trend was staying in an uptrend all the way up here. But as we were climbing, momentum was weakening. And how can you tell that? Well, you look at peak 1, peak 2, peak 3. Okay? Look at the strength of those rallies on each one. And then the second thing you look at is look at the strength of the sell-offs coming in. So you can see we have more sellers coming in on each downswing. So the downswings are picking up strength. The upswings are losing strength. Okay, so that's your first big tip. Now, a divergence, that's what's called a bearish divergence. And a divergence in and of itself is not enough to say that a market's going to completely reverse. It does mean we look for consolidation, which you got here, and which we started up here. But it doesn't mean it's going to completely reverse. So what do we look for once the consolidation starts to say, all right, we could have a bigger move down? Well, the first thing we're going to look for is the previous pivot low, and we're going to look for a trend change. Okay, so that if you don't know the definition of a trend, I'm going to link a video in here called Naked Trading or Fundamentals of Price Action Trading. I'll teach you all about how to read a price action trend. But to put it quickly, we're looking for lower high, lower low pivots. So how does that work? Well, we need to come down. We break through the previous pivot low right here. All right, so that's step one. We broke through the previous pivot low, and then we bounce, and we put in a lower pivot high. So now we have a lower low and a lower high. So lower lows plus lower highs equals downtrend. Now, as of this point right here, we have changed trend. And that suggests that, or it gives us the okay and the clear to say, okay, we can continue to head lower from this level. Okay, so a divergence in and of itself does not always mean complete reversal. Watch for the price action to confirm. Now, there are a couple other things here, though, that also could have helped you with timing entries into the trade. What are those? Well, number one, just like we had back here, we had a bearish engulfing pattern right here. Now, the difference between this bearish engulfing pattern right here and this bearish engulfing pattern right here is the divergence. We had bearish momentum on the second one. We did not have bearish momentum on the first one. Okay, so this is saying, hey, heads up, bearish engulfing. If it breaks that bar's low, we can look for a bigger move down to the support level, which was at 66.5, which obviously we broke right through there. The second thing you look for, once you've broken the support, we look for the first one or two bear flags. So where's a bear flag? Right here is a bear flag, down, bounce back up, break previous bars low, accelerate lower, back up, break previous bars low, accelerate lower. And the second one's even better because it was not only a bear flag, but it also, again, had a bearish engulfing pattern. Bearish engulfing is a gap up, engulf the entirety of the previous bar, close down below it. Okay? Now, if you're sitting there going, well, Thomas, that's a whole lot to base off of just the 240s. You can see why the 240s, hopefully, by this explanation, why they were so bearish. But let's move on and take a look at the dailies, because there's a couple things that would have tipped you off on the dailies as well. So if we come up here, we look at our dailies, once more, we're going to look at the peaks of the price action and look at the momentum. A very nice, well-defined bearish divergence. And the same thing, look at the previous pivot low. If we can break through there, then we should be okay to start really pushing down. That's the first test. Obviously, it broke down through there. Now, at the top here as well, we had bearish engulfing one, and then right over here, we had a bearish engulfing as well earlier this week. Momentum obviously picked up quite a bit to the downside, and we've really fallen to the floor. Now, we'll take it one step further and say, well, okay, let's say we're not trying to pick tops. We're not, because I personally don't do that. I don't go counter trend to the trade, so I would have been looking to sell over here. So how would we have known that we're still bearish this week? Well, if we take a look at our weeklies, Same thing, bearish engulfing pattern on the weekly. Now we did not have the bearish divergence, but you got to keep in mind the dailies and the 240s will build up into the weeklies and the monthlies. So we can still catch very nice down moves or very nice counter momentum moves on the shorter time frame charts, even though the weeklies and monthlies are still bullish. Now we're starting to change to bearish, obviously, but we have a bearish engulfing on the weeklies, and now we're also potentially forming a bearish engulfing on the monthlies. There's still honestly a whole lot of time left, obviously, for the rest of this month, though. So now that you see, okay, understand how you would have known that this was a good setup. I understand why we were selling it. Let's talk about what's next. So you need to have expectations on how a trade should behave and how a trade should play out. So what are we looking for? Well, the next things we're going to be looking at are A, support level at 303.48, B, support level at 290.76. If we can get through there, then we're in the clear to drop quite a bit more down all the way down to 240 or so, 242, down to the next support. The other thing I want to say, be careful of, you don't want to be chasing this market down. Okay, it's selling off, yes, but I'm not looking to sell down here. Why? Because we're really extended now. We've just dropped from a high of 390 all the way down to 311. So we're down 80 points off the high. So be careful, be patient. Watch for something like a bear flag, or watch for it to consolidate, have a little bit of a bounce, and then continue to push lower. Don't sell at the bottom. Okay? So keep that in mind as well, and also don't want to be selling right on top of support. So the next couple of things we're going to be watching for, we want to see momentum stay bearish. Watch for a bear flag on the dailies. We're going to also pay attention to the support on the dailies at 303.40 and 290.75. So that's all I have for you for today. I will see you all in the trading room bright and early tomorrow morning. Don't forget to like and subscribe if you enjoyed the video. And until next time, happy trading.